company, or I should say a stock, that everybody is trying to catch up with right now is Amazon. You guys have done a fantastic job of paying attention to the signals and recognizing and understanding that, hey, gaps fill 80% of the time. We are in the middle of a gap fill, and we're looking for the rest of this to fill. Your RSI and your CCI on the daily are showing overdone. So you've got to take this with a grain of salt, right? This could be potential where a ton of investors or everybody else says, oh, hey, well, 80% of the gaps fill, I've got to jump in. You know, if you're playing that game, Amazon looks like it's going to continue to make this run, but you've got to keep in mind, you know, where are you at with any trade that makes this type of a move. This is the reason that we roll and manage the trade. What I would hate to see happen to any of you is if you caught a move like this and you weren't rolling and then it decided to retrace. And what happens when something like this retraces is the options that you're in lose their volatility. So you wind up losing a lot more than just what you've gained, and that's because they're sucking out implied volatility. And then if you've got anything that's moved closer to expiration, that of course brings on more risk for you as well. So you're not just managing your trade from a standpoint of somebody who's holding stock. You're somebody who's holding options. You've got a much different game to play because of those factors, that implied volatility and that time decay can eat at you. You have to understand how that deck of cards slides. So please be on your toes if you're in that type of a scenario. Make sure that you're managing your trade. Make sure that you're rolling up and taking care of those profits. All right, you guys have a great morning, and we will talk to you guys in the room.